Greetings everyone, my name is RKrivo and I'm here today with another YouTube video for you on various aspects of currency trading. And before we get into that, I want to take care of a few housekeeping details, if you will, and they are in the form of a risk disclaimer. Now I know a lot of you know about this information already, but it always bears repeating, and if we have any new traders out there, this is something that you definitely need to be aware of. And essentially it's just trading foreign exchange. It involves significant levels of risk. It may not be suitable for all investors. We should only be trading with risk capital, and risk capital is money that if it is lost, it's not going to affect your lifestyle in the slightest. And throughout these YouTube videos, there's no guarantee implied or made that any of the trade setups that we're talking about in this session or any other is going to result in profits and not result in losses. And the content that I'm providing here is primarily for informational purposes and educational purposes only, not intended to be trading recommendations. Okay, now that we've got that important aspect out of the way, I just want to go back to the last video, which you'll also be available to view. And we were talking about trend trading in that video, which was about a week or so ago. And as an example, we used the yen pairs being in a strong uptrend. And that started on October 30th or 31st when the Bank of Japan announced that they were going to essentially invoke quantitative easing as far as the Japanese yen was concerned. And that definitely caused the yen pairs to spike up. And they were in an uptrend, and we used them as an example. And we also spoke about the potential for a strong retracement due to the parabolic nature of the move to the upside. And a lot of questions that I get, going forward is, okay, after a move progresses dramatically to the upside or to the downside, over many days, and it just keeps going up and up and up with essentially no consolidation and, virtually no pullbacks, is that a good time to enter a trade like that? And my thought is, as long as those uptrends are still intact, you still want to look for buying opportunities. But a prudent trader, and I try to be more erring on the side of conservative trader than I do on the side of being an aggressive trader, if something's been going on for a long time, I will tend to wait for a pullback to occur and then get into the trade after the trend kicks back in again, after that retracement occurs. And if you've been looking at the charts on the yen pairs today, you can see that over the last day or so, there was definitely a lot of moves to the upside that were going on. But then over the last, I'd say 24, 48 hours, we had a situation where there were definitely pullbacks and consolidations. So what I'm going to talk a little bit about today is the use of the Fibonacci tool, so you can look for levels to which a pair is likely to retrace. And then when it stalls at that level, you can get back into the trend. So let's look at, for example, our weekly chart, because I've got a weekly chart, a daily chart, a 4-hour chart, and a 1-hour chart on the euro yen that I have up right now. Excuse me. And as looking at this weekly chart, we can note a couple things. I mean, the trend is still intact. We've got, higher highs, and essentially the pair might have put in perhaps a double bottom at this level here, pretty close at 135.57. If we look at slow stochastics, we see we've got strong angle and separation of slow stochastics to the upside. This is telling me that momentum-wise, the upper bullish trend is still pretty much intact. What we've got here on this weekly candle, which is going to close out actually in about 15 minutes from now, is we've got a nice shooting star up here, which potentially indicates that the pair is going to be moving back down, retracing. Not necessarily a trend-changing situation, but maybe a pullback. So I'm a guy who trades with the trend. So even if this drops for a couple hundred pips, I'm not going to be trading that against the trend kind of move. I like the trend, kind of like in sailing. You want the wind blowing at your back, if you will, or at your sails, so that you can be moved forward. Or if you're in a race, it's better to have the wind at your back than blowing in your face. Now, if we look at, here's a daily chart of the pair, the euro-yen pair. We can see here how the pair moved up dramatically. Yesterday, we were left with a shooting star candlestick pattern here, and kind of a dramatic pullback today, pretty much about what do we got there? About roughly 230, 240 pip pullback. Okay, so when do we want to get back into this trade to the upside? Okay, all we have to do is use our Fib tool, which comes virtually in any charting package, and we go to the bottom of the most recent move to the upside, and we draw a Fib line from the swing low, the beginning of the move in an uptrend, up to the swing high. Okay, and now we've got here 4 levels of Fib retracements. We've got a 38.2% retracement, a 50%, a 61.8% retracement, and a 78.6% retracement. And if the whole move, for example, from bottom to top, this red line, that's 100% of the move. So if price retraces 38.2%, we're at this Fib level. If it retraces 50%, we're there. 618, we're there. 786, we're at this level. The idea with the Fib retracement tool is to wait for a price action to stall at one of those Fib levels. Right now, on this daily chart, given how we drew our Fib line, we've got price action that's stalled almost right at the 50% retracement level. This is a good thing. We like retracements to occur in between the 50% and the 618 level. In other words, if it stalls at 50%, that's better than if it stalls at 38.2. The deeper the pullback, within reason, the better I like it, because we've got more room to go back to the upside then. The 786 is kind of oftentimes referred to as the Fib level of no return. If it retraces beyond that level, chances are really good it isn't coming back. But what I'd be looking for over the next day or so is to see if price stalls at this Fib level, the 50% Fib level, which is 145.63, or if when Monday comes around again, or at Sunday's open, if it drops below that, and then I'd be looking for maybe some long wicks along one of the Fib levels. I'd be looking for candlestick patterns like maybe doji, spinning top, morning star patterns, something along those lines, indicating that price is stalled and it's starting to move back in the direction of the longer term trend, which, as we said, is still intact. Potentially, as price moves down, slow stochastics is going to move down as well. So we'd be looking for slow stochastics to retrace and then make a cross back to the upside, something like maybe we see over here in this area back in September on this pair, where slow stochastics crossed back to the upside and gave bullish momentum. So rather than trying to get in the trade long after a long upward move has been made, wait until price action stalls at a certain level and then puts in a couple candles perhaps at that level and then moves back in the direction of the trend. That's what I would be doing and looking at on these yen pairs. And like I said, informational purposes, educational purposes, this is something you can use whether you're looking at yen pairs right now or you're looking at any currency pair a week, a month, a year from now. This is the way I would treat it. Let's take a look and see what happens on the 1 hour chart here if we do the same thing. Okay, and let's say we've got a Fib level. Let's say the move to the upside, we've got price action moving up, consolidates, kind of an A, B, and then a C move where we take out the previous high. So let's say on this 1 hour chart, we draw the Fib level from that wick up to the top, and we can see here, it always amazes me how price sometimes stalls exactly on one of these Fib levels. And in this instance, we've got the Fib level lining up precisely on the 1 hour chart with the 200 period moving average. Slow stochastics is below 20. So if slow stochastics perks above 20, and you see here, we've got, okay, a long wick below, we've got another long wick, we've got a couple of spinning tops, and price is looking like potentially, this is Friday afternoon, so I don't think much more is going to happen over the course of the day here in the next, 8 or 9 minutes before the market closes. But as price starts to move to the upside, and as slow stochastics comes up above 20, if that indeed does happen, an aggressive trader could go long the pair and put their stop below the 786 level right here, just anywhere below that. Keeping in mind, this is a 1 hour chart, and the information that you see on a 1 hour chart is not going to be as valid as the information that you saw on a daily chart. Because in each candle here, we only have 1 hour's worth of trading information on the euro-yen pair. When we look at the daily chart, we've got 24 hours worth of trading data in each candlestick. So you're going to be getting much more valid information off the daily chart because it's got more data in it than does the 1 hour chart. Something always to keep in mind. Now, what I like to do, and we're just going to look at the euro-yen pair today, is go out on the weekly chart and see, does this pair have more room to move to the upside? And if I put my cursor right at the top of that wick, we've got roughly 149.11, and then I go all the way over to the left until I bump into a candle over here. And now let's see how much room we've got here before we run into resistance again. And we can see this is a weekly chart, so there's lots of data here. We've got roughly, to the next level of resistance, almost 600 pips room to move. Now, keep in mind, although on this weekly chart, we've got an unencumbered rise, if you will, without resistance being in the way, for almost 600 pips. That's quite a distance. Just because a pair has that much room to move doesn't mean it's going to move that much. So keep that in mind. You can go down to a daily chart and see what kind of situation on the daily. Is there a lot of daily resistance that's out there? And we just keep scrolling out and out and out. And on the daily chart, we come up with not as, let's see, we've got, just about the same amount. So on both the weekly chart and on the daily chart on this euro-yen pair, there's not a lot of resistance, but the pair's got to take out the previous high. And as we talked about last week, there's two ways you can trade a move like that. And one is, like we showed on this chart, on the 1 hour chart, stalls at a certain level and you can get back in as it starts to move up. And as it moves up to its previous high, that'll be roughly 300 pips. If it goes beyond that, it's another roughly 500 or 600 pips. So you can get into it as price turns to the upside, which would be a more aggressive way to trade, or you can wait until price takes out the previous high, which shows that the buyers are back in control in this situation, and that's a more conservative way to get into a trade. So again, I'm not saying any of this will happen. I don't have any crystal ball. I don't have any magic beans, as somebody once suggested. They said, forget about a crystal ball. Magic beans is the way to go. Well, I don't know about that. But as I said, not saying any of this will happen, but these are setups that, in my mind, can't be overlooked. So we just want to take a look at them, like I say, and learn going forward how to trade the market in a situation like this. Waiting for the retracement to occur, let it stall out, and then enter the trade back in the direction of the trend. This is an uptrend. If it were a downtrend, we would just be doing everything reverse of the way I mentioned. So please feel free to follow me on Twitter, and that's at RKrivoFX, RKrivoFX, and feel free to email me if you like with any questions on these YouTube videos or any other questions you might have regarding currency trading. You can email me at RKrivoFX@gmail.com. Okay, thanks for listening to this, and you have a great weekend since this is Friday afternoon. Bye now.